Good afternoon. It is Tuesday, 3 p.m. Remember, we always air out our webinars at 3 p.m. In the olden days, 3 p.m. is a nap time. You know, like my dad, who passed away for almost nearly 12 years now, and he always had a 3 p.m. nap time. So this is the time that people have the least efficiency in their work area. They're just tired for the remaining days, the remaining hours. But 3 p.m. webinar is really meant to waking you up from your comfort. And you're thinking, oh yeah, as a small business owner, this year I'm running pretty good. Everybody is in recession. I am not. But what you need to do before the end of the year, this is this webinar. This webinar will just tell you 1, 2, 3, 4, what you need to do before December 31st, that clock rings. So make sure you get that done. I'll tell you why you have to do it before that. You may say that, oh, that's not true, Ying. I can buy traditional IRA before April 15 next year. So December 31st is no big deal. It is big deal for a lot of things. So let me explain that to you. This is our website. You know how to find us on communitycpa.com. And we also have a YouTube channel. The channel name is Community CPA. If you go onto our channel, subscribe to our channel, then every time we have a new topic come out, you will see it. If it is interest to you, you come online to listen. If it is not, or later on you thought, oh, I wish I could have listened to that one, you can find it in our channel. So you can do this magnify glasses when you log into our channel. You can search keywords. Just kind of put in IRA or put in year-end planning. So those webinars related to these topics will come out. I also have 2 books on internet for sale. Every dollar, I think the internet asks you for $15. I don't quite remember, maybe 20. Whatever dollar they're asking you to pay, that dollar goes to Immigrant Entrepreneurs Summit. It is a nonprofit organization. I started back in 2008. It's going on till today. It's already 18 years, but more than 18 years. Oh, we started in 2018? No, I don't remember. It's 18 years long already. So that nonprofit really helps people to grow their business. So all of our book proceeds goes to that nonprofit organization. So we donate to there. This is a disclaimer saying that, you know, obviously internet content is great, convenient, but you want to take responsibility of what's in there. Let's get going with what importance about the year end. I always tell folks that, you know, the most directly, the small business owner cares about tax saving. If you tell the small business owners that, oh, I can save $1,000 tax for you, that's very interesting. But a lot of them do not realize where that tax saving is coming from. I always say the most important accounting tax field for the small business owners is actually your accounting. Your accounting is the baseline for taxes. Whether the tax folks will use tax credit on you, whether the tax folks will have more deduction for you, or apply some crazy depreciation schedules for you, all of that is coming from your financial statement of your business. So it's accounting. So it is important for the year-end accounting to be done correctly. Not so much about, you know, you just got a good tax person, that's the end of it. The more I am into tax strategy, right? The more I am into tax strategies, the more I see the importance of accounting. So this is where we want to talk to you about accounting. Couple of key accounting consideration you must have is financial statement closing. You want to close your book, right? 12 months up, you close the book because you want to review your general ledger. I call it, I had a accountant quite some times ago. His name is Kevin. He's not working with us anymore. He moved back to Korea. And this person had done a financial statement for a client. And when I review the general ledger, I go to utility, I see Mid-America 12 times. I go to water, I see water bills from the same agency issued 12 times. That general ledger is literally beautiful. Do you know what I mean by beautiful? Beautiful means under one category, you literally can tell who are the vendor using these money on your account. So you don't have water bills mixed with utilities. You don't have inventory that mixed with your salaries, right? So you want your general ledger to be so beautiful. And that is what that accountant did for me. And I actually, frankly speaking, I have not seen another accountant that I have been so new, because at that time, Kevin was only like 6 months new. And when I was looking at his financial, I know he's talented. So it doesn't matter where he goes. He's in Korea right now. He'll be somebody. And I can tell from that little bit of work he did. So financial statement closing, review general ledgers, making sure your general ledger is absolutely beautiful, not messy. And you look at this amount, look at this vendor, goes, oh, I don't know where this come from. And another story, we have a client, and one of the employee who worked for this client was always paying vendors for construction materials. It's always to this vendor. So the boss don't even know, all the vendors. So actually it was a fake vendor. She was paying herself out of these vendor is her own company. So the company was paying this employee out of the fake vendor from this employee for like 3-4 years. Every year is about $100,000. So with that said, you know how important that is with a ledger. And be sure you know where your income is coming from, where your expenses is going, and make sure you know that your balance sheet actually is understood. So those are the things we want to, tell small business owner that if you are really a good business person, you at least need to be a good balance sheet reader. So for example, inventory management. Inventory is a balance sheet entry. When you purchase everything, it goes on the balance sheet, inventory. And the direct relationship between inventory and your income tax, the more inventory you have, the more taxes you pay. You probably goes, oh, Ying, that makes no sense because I bought inventory, I spent money. Okay, inventory, not money you spent. Inventory is money you transferred into asset. You didn't spend it. You only spent it when you move inventory to cost of goods sold against your sales. So this is where if you don't want to use your brain and you are too busy, I know what our small business owners are doing. You just remember, hard-coded in your mind, the more inventory you have, the more taxes you pay. So with that, you know what to do. At the end of the year, you want to review your inventory, do physical count, making sure that you are not overstating inventory on your balance sheet. Right? So that's balance sheet. Fixed asset. Fixed asset is another thing so important, right? And we have fixed asset, and you bought a boiler, you bought a cook tools, whatever you call it. And that's your fixed asset. Nowadays, fixed asset is being treated differently, right? So you want to make sure that you review your fixed asset. Let me tell you, if you're paying too much taxes this year, do one thing on fixed asset. Do a fixed asset physical count and see which one you're still using, which one you no longer use. Make sure your tax preparer write them off for you. All right? So that is the year-end thing we are talking about. Of course, other than fixed asset, other than inventory, there's a payroll, there's employment management. A lot of times in December, the business owners are so busy and we're running payroll. Last day of December, you go, oh, I want to pay my employee bonus. I'm going to write them a check. That may not be your expense in this fiscal year, in 2025, because the employee may cash them in January, right? If you're a cash method, they didn't cash it for you, then that's not your expense. And a lot of times, even with some large companies, their payroll run in December was actually taxes, draws all come out of in January the 2nd. So they could accrue that expenses over to current year just because it's a December payroll, but it ran into January. Those are the large company with accrual accounting method. But if you are a small business and you're counting your money in and out just as what the bank reflects, most likely you're on cash base, then if you do your payroll not quick enough, it doesn't go out this year, so it's not your expense. Right? So also with our small business owner, I always tell them that to review their payroll record, because we have a small business owner was telling me that, I just have one payroll plus myself too. We don't really have another payroll. But on their payroll record, they have 4. So there you go. If you don't review your payroll record, how do you know it is even right? So then they went back to look at the payroll record. Why there's 2 more people? Oh, they remembered in the beginning of the year, there was one person worked for me for 2 weeks. Okay, got it. What about the other one? Oh my God, the other one, somebody left me a long time ago. Am I still paying that payroll? Oh yeah, because you didn't tell ADP to stop. So ADP continue runs and you're continue paying. So guess what? Our small business owners was paying the employee for 12 months without knowing it. So this is what we call the year-end review, folks. Just wake up your senses and really look at your number. Make sense of what you have done in the whole year. Of course, in that particular situation, actually, the business owner went back to the employee, explained employee did notice she get deposit every month for that amount, which she didn't notice that before. So, paying back worked out, and some of them already paid payroll taxes, so she has to report income. So there are things that need to be worked out, and they will work it out. But a lot of times, if you run your payroll direct deposit, folks don't realize you're still running payroll for them. That is sort of understandable as well, right? Who cares about their bank balance? But of course, I think people probably just don't want to say anything if you just happen to deposit money voluntarily to somebody's account, right? So with that said, at the year end, you want to look at your payroll expenses. You also want to look at your 1099 and W-2, all these compliance related things, whether you have their social security number or whether you have their address, and whether you if there's anything that state and federal government already implemented that needs to be reflected, like sick day in Minnesota. Those are the things need to be reflected on the paycheck. So those are year-end items. If you want to do year-end bonus, pay it early. Pay it into the year so that way you can deduct that for yourself, right? And you also want to look at the taxes, estimated taxes. You may just did so well in this year and you're going to end up paying taxes. You know what? I want you to get the taxes paid now. Don't wait until later. Don't wait till April 15. No, because they will have so much penalty on you. So I have a slide saying that estimated tax and penalty avoidance, and we want you to handle your estimated tax payment. Estimated tax payment is made so easy nowadays, right? You can go onto irs.gov website and just pay estimated for 2025. Just pay it online. The state also, even though every state runs a little different, but if you go to state revenue site, they will give you the similar prompt for you to pay it into the right period. With that, and the year end also have a big portion on the wealth management. Do you know that if you pay for 401k cash balance plan for your employees, you can commit that in 2025, say $200,000 total, but you don't have to submit that until the time to file your company taxes. So whether that's March 15 or September 15, okay? If you are sole proprietor, it is October 15. So what I am saying to you is, earlier I was saying that if you are cash accounting, money has to go out before you count as expense, right? But this one is different. For deferred benefit, you don't have to pay it out, but you can count that as your expense already. So that is something I want to let you know. So you may, we have a client pays about $1 million a year on deferred benefit. And that $1 million normally came out September of next year because they file extension. But when they file their taxes for 2025, they would already put the $1 million on the plan, on the deferred accrued benefit. There is a special area for you to put it in, so you're not cashed out of yet, but you can deduct that as expense. So very important. And for small business owners, 401k, and you can put away $23,500. So let's say if you are a self-employed small business owner and you didn't pay yourself W-2 in the whole year, but you run an S corporation, so you have a reasonable pay requirement. What you can do is you can run yourself a payroll for $23,500. And no penny will be taxable because you will run that into 401k. And move that into 401k account, and then on your W-2, your taxable income is zero. Your Social Security Medicare would be $23,500. So those are the things year end is a beautiful time to start thinking outside the box. It's not even out of box. It is actually in a Pandora box. It is kind of fun. Then you can do a lot of things to not pay income tax. Okay, especially if you didn't really want to contribute to the ballrooms in the White House, maybe this is the way that to get your taxes really leaned up and know how to save your dollars and grow your business, right? All right, so on the next slides I have, it is related to the business compliance. So this is not something will be naturally included in your year-end reminder, but we have a business consultation piece, and we also have legal service in our firm. Our attorney's name is Stephanie. So with that, we actually can remind you about a lot of those things on the legally side. So with your business registration with the state, try to not get your business into dormant, and making sure that you file your annual report, and make sure that you understand what license need to be renewed. All of these things should be on your calendar. And now is December 31st, 2025. On your calendar, one is what license due. You should mark that so you know that you're going into a new year without glitches. You had everything. One more thing I want to mention to you is not business compliance, but it's business must, which is to review your insurance. Review your insurance. We happen to have two clients, one in California, one in Minnesota. Both had a fire incidents. The one, of course, is caused by neighbor's fire, so the business destroyed. But we know the difference between the two business. One is very well insured. The other one is barely insured. The difference is huge. So make sure that there's too many incidents out here right now. Your key employee might be deported tomorrow, then you have interruption of business. So you really want to make sure that you have your key man insurance, you have your interruption insurance, you have your whatever liability you can think of, and just make sure that you review your insurance from head to toe. Protect yourself. All right. Other than that, the last slide, but not the least, I want to remind you is trust update. You may have already done a living trust. People call that grantor trust. People call that family trust. People call that trust. As long as you don't file tax return for that trust, it is revocable trust. So it is in the nature of living trust. So you want to update it. It is very easy to forget. But if you file taxes for the trust, and you won't forget, because you file the tax return, so you actually will organize your asset, income, expense, you all have that there. It's just this kind of living trust you easily to not update. We do have a client, parents passed away, then they pull out the living trust. Guess what? The living trust forgot to put their little young brother on it, because the parents completely forgot about putting the last born on the living trust that was already established. So those are the things you don't want to miss. A lot of time I tell our folks that bring your living trust to your accountant. Have your accountant update your living trust for you. Not literally, but they can look at your living trust, goes, oh yeah, you got new company, new asset, a new house. These are the things need to be updated. Go back to whoever did your living trust. Then you can go to update your living trust. Very important. And it's not something you should ignore. That should be reviewed on the annual basis. All right. What if you desire to know more? These are our partners. So you can see me there, and you can come to our website to make an appointment with us. These are paid consultation, paid advisory session, and online video session. I know I particularly have evening hours that open up just because during the day I have too many appointments. I won't be able to take on the urgent cases that you really felt urgent. In that case, you just book the evening hours as long as you see it open. We also have Dan right here. He is our business advisory group leader, and he is a partner as well. And he offers 30 minutes free session. So if you don't know what community CPA is capable of doing, what are expertise levels, or you have questions you felt like you need to know about the firm, about our service more, and give him a video session assignment, and is free, then you can ask all the questions you have. Then you see Derek. He's our IT gurus. If you like our appearance, like our client portal, like all our system, guess what? That's the guy should take the credit. And Song speaks Spanish. Yes, surprise you, right? And he is our tax audit in charge. So our firm, we do audit. Okay, we do audit on financial statement, and we actually PCOB licensed, and then Song is the person in charge of that. Juan in charge of sales tax, accounting, and payroll. So if you want to, New Year is here, you want a new payroll service provider, looking into our firm. We are here to help you for sure. The last slide, but not the least, serves as a comprehensive contact point for community CPA. We're providing you here essential information for potential clients. That number, 515-288-3188, has been with us for 28 years. Yes, 28 years. So it is a number well known, and you dial that number, all of our branches are ringing. So we have we have a policy internally, no dropped calls. If we drop your call, you actually win the lottery. We don't drop calls. Of course, you don't call us at midnight. Call us in the office hours, 8:30 to 5:30, and we pick up every call that comes in. And I hope to see you again. And my session is always on Tuesday, 3 p.m. and Saturday, 3 p.m. I will talk to you again. Watch our notifications, okay? We normally give notifications at 11 o'clock that day for that webinar. Who cares about planning? We're just gonna be doing what we see the most important on this week. Then we pull out the content and we teach. And we show you how to do it yourself. All right. Talk to you again. And good week.